Hey everybody, good morning. How are you today? Welcome to a new episode of Stocks for Breakfast. It is Wednesday morning, November 3rd, 2021. Today we're going to talk about Roku stock and whether or not Roku stock is a buy ahead of earnings. We are going to talk about the FOMC today. We're going to talk about a book. I like teasing that a little bit. But we're actually going to talk about how crazy the market has been Monday and Tuesday heading into the FOMC announcement. And I mean crazy in just the most amazing way. This is usually a couple of days heading into the announcement where the market kind of drifts and volume dries up a little bit and gets a little bit tougher to trade. And you typically pull back on your position sizing, maybe even get in there and take a 2-to-1 risk reward as opposed to a 3-to-1. But just absolutely amazing 2 days of trading. I hope you've been taking advantage of it. And if not, keep joining us here in these videos. We have a lot to talk about today, so stick around. I'll be back in just 1 second. Okay, so as with everything that we do here, everything here is for educational purposes. It's up to you to make that final decision. It's my mission to help you make better decisions. We're also going to talk about algos today, in addition to everything else that we have going on. The futures are just slightly down right now, which is not really that big of a deal considering we hit new all-time highs again yesterday. I want to point something out that somebody just mentioned because it actually happened in our community yesterday inside of the boot camp. So I want to just scroll up to a comment that was just made. And it has to do with trading order flow. And good morning, John. I'm going to use you as an example here today. And if you didn't happen to see what Avis did yesterday, we'll take a look at the chart in a second. The chart is CAR. Blew away the earnings. Right? It was just really good numbers. The stock at one point was up 217%, I think, from the previous day's close, pulled back a little bit. But the last part is what I want to address because somebody actually brought it up in our community yesterday about shorting the stock as it was rocketing higher. And I almost jumped out of my seat. I can't even explain. So first I want to pull the chart up just to give everybody some context of what we're talking about if you didn't happen to see it yesterday. Now, that looks like kind of a normal move for day trading. But if you get in there and you start to dig into it from the low of the day, we're talking about it was up 215% at one point. It was up $300, but 215% at one point yesterday. And it was amazing. It was incredible. And right around here, we had the traditional somebody in the community asking about, is it okay to short it up here because of how far it went up, which is kind of the opposite of the question that we talk about all the time, which is somebody asking about buying a stock that's getting crushed without any argument at all, other than the fact of how far it fell down. Thankfully, we talked that person, that new bootcamp member, off the cliff, and they chose not to short sell the stock because at that point, it actually went up another $200 after we had that conversation. So number one, good thing that he asked and we had the conversation. So you kind of learned to avoid those things. But number two is a big part of trading, which is something I was just unbelievably excited about yesterday and mentioning to the boot camp, especially in the afternoon yesterday, which is when the market's obvious, because we get some questions about short selling, and we're going to talk about Zillow in just a second. John Bates, I don't know if John Bates is on the call right now, but last week started to build an argument for short selling Zillow ahead of earnings, started to build that position, and the stock's getting hit this morning. There's certain situations where short selling makes sense because the stock already has bearish order flow. But when the market's reaching new all-time highs, when you find plenty of stocks that are in sync with the market, trading with crystal clear bullish order flow, and you have spot to time those entries in the direction of where all that buying pressure is going, there's absolutely very, very little reason to be spending a lot of time focusing on shorts. Now, Zillow's a little bit different situation. John has an amazing trade in motion right now. If you saw that Zillow also is getting out of the house flipping business to getting back into their core business, which is pretty, I think, a pretty smart move from a strategic perspective. But I want to get to the other part of that, which is this here. It's so much simpler and, quite frankly, easier to be a profitable stock trader when you're simply following the order flow and you're not fighting it. And we actually mentioned yesterday, if we go back out to the daily chart, we made a big deal yesterday when we went over our sector rotation here, actually in the morning, we were mentioning technology, consumer cyclical, but we did put a special emphasis on healthcare stocks because the way that we're watching them from day to day, week to week, and month to month, we noticed that over the last 3 or 4 weeks, even though a lot of them took a hit, let's say mid-September through October, the way they went in bearish order flow for about 4 or 5 weeks, the last 2 weeks they perked up and there's been some tradable opportunity. So again, I want to challenge everybody who's on this call right now to dig in a little bit as we post this for you in the morning. Take a screenshot of it, take a snapshot of it, and then do a little bit of extra work where you're like, okay, we just talked about healthcare today. Why? Can I build an argument for some of those ideas? And yesterday we had some really nice day trades unfold in this sector. Now, if you're not day trading, that's fine, but they unfolded in a way that we were prepared for them. And that's the big part of trading. And I want to in a second, we're going to get to Roku, but then I want to go into a preparation conversation. So you can see here clearly that Lilly got hammered, accelerated to the downside at the end of October, and then started to change the order flow just a little bit. And you can visualize here where it broke the downtrend, accelerated to the downtrend here. This is where it broke right there, right? Because this is the down move. This is the previous low. So right in this window right now here, let me zoom that out a little bit. This window right here is, kind of the box. That's the right price. So only one of two things can happen. It'll validate the bearish order flow and break back down and take out the previous low, or that new window, that new box that it's in, confirms a new move to the upside. So that's what we started talking about right here. We were paying attention to it here. And this is the big thing. I just want to make this a little bigger for you. This right here, okay? This right here is where we started to see it float up the list here, which is why you need to do this or watch this or snapshot this every day, because you start to notice stocks that go like this. They go from 10 to 8 to 6 to 4. And as that's slowly moving up, it might not be tradable yet, but it needs to be something that is in your watch list. So we called out the last couple of weeks, we've been noticing it. And now yesterday, we actually had some just amazing, amazing trades. And you can actually see our entry there yesterday in Lilly. And we just kept walking it up, walking it up. We shifted from managing it from an initial stop loss to break-even stop loss to trailing stop loss using our profit maximizer. And it was kind of fun as a community to walk through the trade and talk through the ideas. The biggest thing I want to talk about here, if you happen to be day trading stocks, is you'll notice something. It's very common, and I'm sure that we've all done this before. When you're in a profitable position, you're watching P&L go up and down. You're like, oh man, I can't wait. I want to book this profit. I want to put it in my wallet because I'm afraid it's going to vanish, right? It's easier to manage those trades when you have some sort of structure. And the thing that we kept talking about in Lilly yesterday, after we put the trade on, was, remember how we keep talking about order flow? We're saying well bid means higher highs and higher lows. And that means that smart money is supporting the prices. It's not letting it go down, and it's paying higher prices. So these are the little clues that you pay attention to, which also makes it a lot less stressful to manage the trades. So yesterday, while we're in this position, it exploded and kept going and kept going. But the candle kept going like this, right? But it did not make lower lows. It did not make lower highs. So even through all the wiggles and jiggles, and as it was going back and forth, we're like, no, hang on. It still hasn't come down. It still hasn't taken out the low. We haven't even gotten an alert or a signal to start moving up the trailing stops. So we just kept trailing it up. So the feedback that I want to give you today, which is make sure you have some sort of structure. In the boot camp, we have what's called the profit maximizer, and we have two different profit maximizers. One of them is a momentum profit maximizer, and one of them is when we have all of that order flow stacked, and we switch out to a trend trading profit maximizer. And there's a couple of different pieces to it that allows us to hold for a little bit longer term moves. So I just wanted to use this trade in two ways as an example. Number one, we were tracking and stacking the order flow in the healthcare sector, and it was a part of our watch list yesterday. Number two is we took the trade and it ended up following through, and then we shifted into profit maximizer mode. So I want to challenge you on the weekend, or whenever you do your game planning and you start to script stuff out for the following week, ask yourself, what is your structure for managing profitable trades? It's a big deal because a lot of people have no problem with the entries, no problem with the stop loss, but as soon as something starts moving in their favor, they're like, oh, I got to get out of it. I got to book it before it vanishes. And when you see these kind of opportunities and you have the structure, which again, for us in the boot camp is the profit maximizer, it just becomes easier to sit back and say, okay, until I see that happen, I'm just going to let the profit continue to accumulate in a much less stressful manner. So I hope that helps you out a little bit there. Very important. So we're going to shift over now into Roku, which is the story of the day today, as other than the FOMC announcement, and whether or not Roku down in this area is a buying opportunity. So reports scheduled to report after hours today. So again, I want to talk about what are the numbers to watch. And we're going to talk about a couple of other stocks that reported yesterday. BBBY, I think it was up 60% or some crazy number like that after hours, maybe even 80%. I will take a look and see where it is now. But the numbers for Roku right now, we're going to shift on over. I'm going to hide the screen here a little bit. And remember how we talk about every day, it's the growth rate that matters, not the raw numbers. It's the growth rate that matters and pushing it into something new. So you can see here, this is the estimate of 8 cents versus 9. So that's not really anything that's going to rock the world, right? But it's the account numbers. Remember, the subscriber growth rate is what everybody focuses on with Netflix. This is obviously a subscription service, same area, right? They're looking at year-over-year growth rate, expecting a year-over-year slower growth rate, okay? Revenue is expected to rise. That's the raw number, but a slower pace. Pace meaning growth rate. So we need to pay attention to when the numbers come out on Roku after hours today, it's the growth rate of new subscriptions and active users and the growth rate of revenue. Those are the two big things. So when the numbers come out for Roku this afternoon, don't jump the gun and start, oh my God, EPS was 10 cents versus 8 cents. Let the numbers come out and give yourself a chance to make an informed decision if you're choosing to trade it quickly, which that's probably a whole other discussion. But then if you choose to trade the next day, you let the dust settle a little bit and you look to start building a position in Roku. If you like it, it needs to exceed the growth rate numbers for subscribers and for revenue in order for that to be perceived as bullish. Now, here's the big thing. The number, you need to know what the number is in order to know whether or not it exceeded that growth rate. So you need to dive just a little bit deeper into that article. I'll actually post that into the chat right now so you can get in there and see what the expected numbers are. I want to get into some other topics right now. But yeah, Minvi, exactly. Exactly. The KPIs are important. So you need to know what's the expected growth number and then what is the growth number that's actually reported. And that's how the stock price is going to react. So remember, the stock price is going to reflect those future cash flows, and that's what we're buying. We're not buying what happened previous. We're buying what's going on going forward, which is the reason that car yesterday just absolutely exploded to the upside. They were buying stock hand over fist yesterday, which actually brings me up to something else. So we're going to take a quick look at car again and the movement from yesterday. And what's super interesting is there's a lot of conversations. I think, raise your hand if you've ever had this happen. The algos are out to get me. As soon as I bought the stock, the algo hit my stop loss, and we all complain about that. It's whining. And let me tell you something. Let's take a look at this chart again. All right. Before we state how much publicly we hate the algos, and we think that the algos ran our stop by 1 cent, and then it ran back in the other direction, that was algorithmic buying yesterday. That was not people hitting their TD Ameritrade account and loading up on the thing and pushing the stock from 176 to 530. That was algos piling on top of each other and couldn't get it fast enough because everybody had that same, basically the same program shoving that stock higher. The numbers were good. I mean, really good. But to double the stock and think that buying it at $520 was a smart move yesterday. Remember what we talked about in the webinar that we did last week with David Trainer, where we were talking about we're buying the future cash flows of the stock, and today's stock price needs to match that valuation of those future cash flows for shareholder value to actually get paid. How are you valuing Avis at $500 yesterday and believing that you're buying future cash flows they're going to give shareholder value? It's just insane, quite honestly. But my point is the algos are your best friend when you are trading with them. So whether it was car yesterday, whether it was Avis Sciences yesterday. And again, these are trades that we're taking in the community. They were called out all yesterday afternoon. The community just an amazing, amazing job yesterday. And if you want to learn about the boot camp, click down the link below the description. I think you're going to be surprised what's included. So my point is this, and this is kind of, and I know, John, I know you didn't short that. I just want to use that as an example. When the order flow is obvious, stuff like this happens in the direction of the order flow more often than not. So you have all the responsibility of first finding the order flow, which again, stacking the order flow, tape reading, and risk reversal. These kind of amazing, amazing trades happen when you are prepared. And it's a big deal. It's a really big deal because a lot of traders think they're just going to log in at 9:20 in the afternoon, find some stuff to trade because they hit an alert. That's amateur. You want to be a real trader who is in charge of that outcome and see your account grow month after month after month. You need to do the prep work to put yourself in position to be involved in stocks like this. Now, obviously, we have a few other ones this morning that are trading pretty strongly this morning as well. BBBY. Yesterday, it was up 80% after hours. They announced a buyback, a deal with Kroger's. There's a ton of stuff going on with the stock right now. Right now, it's up 54%. So remember what we talked about yesterday. This is 1 day of order flow. We need to see this order flow hold the bid, and then we'll look to participate in a little bit more meaningful day. So 2 different trade strategies looking at BBBY right now. I'm saying that really fast. Today is a day trade as long as it meets the day trading criteria, which we need to recognize is today's order flow in sync with that catalyst. So reading that tape is it holding that line in order for us to get in there and bid for it? If not, and if it starts trading down, we're not going to bother with. There's too many other good ideas that are already moving in that direction. Too many other good ideas which are now at or near breakout levels where there's a lot more room to go. So this will be a day trade for me right now, and then evaluate a little bit more for a longer term trade to see if the stock has legs. Sticking with this idea, and we mentioned the stock yesterday, not BBBY, but BBY. We keep mentioning the 124 breakout level, and you can see why here. Sellers just keep coming in and shoving this stock down, and right now it's trading at 124.94. As long as it's above that level, we are still looking for a buying opportunity. First to put on the first piece. Remember, position sizing and how you work that order is going to be completely dictated by the order flow and how strong that order flow is, how obvious that order flow is. Right now, we know 124 has been a wall of worry for the buyers, and it hasn't been able to get through there. It's above that level now, but the first time, you could see about 8 different times it got shoved down at this price. So today, above 124, whatever your entry signal is, for me personally, it'd be my first position, looking for it to hold the bid, looking for it to go well bid, looking for it to close strong, looking for a volume to be a little bit elevated on the breakout. So think about all those things there that I said, okay, if all these things happen, that's going to validate the idea. But even prior to that happen, I'm only going in with my initial piece because you don't size up at a place where sellers keep shoving it down. You need to be smart with your position sizing, and you add when you get feedback from the market. That's how to trade in a way where you're only adding to your winners. And if they move against you, it's not that big of a deal because you had the right position sizing. There's other trades that are lining up perfectly, and you need to get in there or should get in there with a little bit bigger position size because the order flow is established. There's been multiple pushes and pauses. Now you're getting involved in the middle of a pause looking for the next push. And we actually had that in Plug last week where we've been mentioning this push, this pause, and another push. So there's different scenarios. And again, Finviz on the call right now. Situational analysis is what will separate you as a trader. So again, the situational analysis in Roku, we know that we're looking for growth rates. We know that it's been in bearish order flow. And now we're looking to see if those growth rates exceed what's expected. And that's how the stock is going to react. Take that to the opposite side of the market in Zillow, which we talked about a little bit before. So if we get into Zillow here, Zillow, which is interesting. If you haven't shopped for a house recently and been on Zillow, Zillow was actually into the house purchasing business there for a while, which was a little bit crazy because, again, very similar to what we're talking about other companies that are branching off into stuff that's not their core competency. It's a big difference. Zillow started buying houses, and they found out that they couldn't predict prices, believe it or not, with all the data they had and carrying all that inventory, and they couldn't catch up. So they decided they're out of the business. But right now, you can see the stock is down 19% off of that. So I don't know if John Bates is on the call right now, but John Bates has been working the short sale with puts since last week and getting paid in a big way this morning. And again, this is being a part of our community. You work through the ideas, understanding that we're mostly bullish order flow right now. Does this short sale make sense? John built the argument. We talked about it, put the trade on last week. And now yesterday, prior to earnings come out, we had another conversation about what was expected today. And he's getting paid in a big way on that right now too. So awesome job, John. Really awesome job, John. Obviously, Federal Reserve today, FOMC announcement today, taper, right? We've heard that a million times this week. Well, the big deal is it's not a question of if they're going to stop. It's a question of when. The big thing, again, the expectations of today's conversation are they going to say we're starting now, or there's some conversations, are they going to do it in June of next year? Which, look, I mean, just start already. Get it over with. Start doing it. Let the market start to self-correct. We'll get back to normal stuff where we're trading profits and losses as opposed to this quantitative easing and all this other stuff. So 2 p.m. today, if you happen to not be aware of when and why and that kind of stuff, if you're a day trader, you owe it to yourself to know when this comes out. You need to make sure you manage your position size heading into the FOMC announcement. If you're a swing trader, it's a little bit different. Do you have a head start on a trade? Is that going to affect what they announce, how you're going to manage that position? You need to make those decisions now so you're not reacting crazy after the announcement later. I think that the market's going to have a little bit of a correction after he gets a little bit more specific with his language, which, let's face it, I mean, we're at all-time highs again yesterday, okay? So it's not like there's anything to worry about right now. We are punching through 461 and change. We're down 37 cents right now in the SPY. The ES futures are down just a little bit as well. The market's allowed to breathe a little bit. Whether the excuse of the FOMC announcement today is the reason, it doesn't make a difference. The market needs to breathe a little bit. That's really all I can say. Horace, I just want to give Horace an answer. Has the boot camp changed? Yes, actually it has. It's changed a lot. And I can guarantee you that it's going to continue to change because every single week and every single month, we are up leveling what we do. There's a lot of, it's not even the same program it was a year ago. That's how many changes we make based on feedback of members in the community. And actually starting in 2 weeks, we're actually launching a new version of it where we're going to have a lot more onboarding live sessions. We call them the success path to make sure everybody has their charts and their scans and everything set up properly while you're in the boot camp. So that's a good question, Horace. Oh, by the way, if everybody could do me a favor, if we're getting value out of these videos, do me a favor, smash that like button and hit subscribe. It would actually mean the world to me and lets me know I'm helping. All right. So, all right, John's here. Okay, awesome. Still in the Z trade. Awesome, John. Excellent, excellent, excellent. Let's see. Oh, thank you, Min. Really appreciate that. Thank you. Appreciate that. Okay, so FOMC today. Another one we're going to talk about today is Lyft. Lyft, last time I looked, Lyft was up around 7%, I believe. Lyft and Uber, I believe, reports tomorrow afternoon. So Lyft, actually more than that. Lyft is now up almost 14%. So again, what's the situational analysis here in Lyft? It's bearish order flow, has been for a while. Today we have a one-day catalyst and we're looking for follow-through. So it's being reported and interpreted as bullish right now. So I have two situations right now. The first is the day trade scenario, looking for this 14% move to hold the bid. I'll look to day trade it. If we hold the bid tomorrow, then we could look for a little bit longer term trade in Lyft. We already talked about Zillow. I want to talk about sector rotation and give you some more ideas for heading into today. I hope that you took advantage of the ideas that we talked about yesterday, which are some of the same ideas we're going to talk about today, quite frankly, which is technology and healthcare stocks. We talked about them yesterday. I hope you wrote down which ideas, did that little bit of research between the end of this call and the market opening. So we're going to hop into those in a second as well. Okay, so I just want to talk about this for a second. I just want to point that out. The book is Mindset. You can see the author here is Carol Dweck. I am very often asked about what separates successful traders from someone who knows everything about the market but can't get profitable. There's actually two things. Number one is I would suggest you get into the boot camp. And I don't say that lightly because we work our tail off in there to really make sure everybody has progress. The second thing is it's kind of the secret that's in this book. I'll just give you if you want to take that again. there's two main topics in the book. It's called a growth mindset versus a fixed mindset. Now, fixed mindset is a trader who keeps trading and doing the same thing over and over again. And they are like, no, I'm right. The market's wrong. What I do works, but they're not profitable. The second trader, which actually kind of gets back into what we just talked about with the boot camp, is the growth mindset is using every single experience as feedback to do better. You place a trade, you analyze it, what you did right, what were the conditions, and the next trade, and the next trade. That means every single trade that you get, if you have the growth mindset, which is taught in that book, every single trade is feedback for you to be better on the next trade. And again, we had some questions about the boot camp. That is exactly how we run the boot camp. Every single thing that we do every single day, from meetings to coaching calls to how we run the community to how we run the broadcast in the morning, everything is based on feedback. Did you guys like that? How did we do? No, I didn't like that, or that part was awesome, and we do more of that. So you need to pay attention to that in your trading. Every single trade is not good or bad. Is it Shakespeare? I think we'll get really high level here now. Shakespeare said, nothing is either good or bad, but thinking makes it so. Trading is the same way. Neither of your trades are good or bad. You can't get too low on bad trades. You can't get too excited on good trades, although I will give John a high five for that short sale in Zillow. So if you start right now, today, from your next trade, where you see every trade as feedback, as an opportunity to be better on your next trade, you will be amazed at how fast you stay away from stuff that doesn't work, which is the first part of learning how to be successful. And then you start to move closer and closer to making that list of only what works. And then I think somebody had mentioned before about discipline. You'll be amazed at how fast you start to move higher in your account, how fast you start to feel conviction in everything you do, if you understand to pay attention to what's working and what doesn't work. What doesn't work. All right. So I want to get into some ideas here right now. Oh, okay. Let me hold that up for you. The title of the book is Mindset, and the author's name is Carol Dweck. You can see there's actually nothing on here about trading, but it's 100% applicable to trading. I don't tell anybody to spend money unless it's absolutely worth it. That is one of the most valuable books on my bookshelf because it helps you like that when you actually pay attention. Think about your next trade. Think about your last trade. Did you react emotionally, or did you say, what can I learn from that? Did I do everything I was supposed to? Here's a little situational analysis that's important to understand. There's a difference between a tough market and bad trading. And you need to make that distinction between the two. If you lost money, was it because the market's tough and you managed it properly and you kept your losses small? Or did you lose money because you didn't trade well? Big difference between the two. And those are the kind of things you need to pay attention to. When you are growing as a trader and get to different levels of trading, the main question you need to ask yourself, assuming you have an edge like we do, which is order flow and tape reading, once you have your edge, the number one question to ask yourself at the end of every trade, at the end of every day is, did I trade well today? Not how much did I make? Did I trade well today? When you trade well, assuming you have an edge that works over time, did I trade well is the number one question. And why is that? Because you're in control of that. Isn't that why we're on this call in the first place? You want to be in control of the outcome. You want to be in control of your freedom, your lifestyle, and all the other great stuff that goes with being a profitable trader. Ask yourself at the end of every trade, and especially at the end of every day, did I trade flawlessly today? You want to start getting to the point where the honest answer is yes. And sometimes the answer could be yes, even on losing days, because you traded well, but the market might have been tough that day. So remember to separate those two things. All right. So we want to get into, so again, if anybody wants to learn about the bootcamp, click the link below the video or contact us at support. You'll find that in below the video as well. We'll answer as many questions as you have. Can't wait to see you on the other side, actually. All right. So I want to get into some ideas. We're talking about these lists here. We're going to look at technology and some healthcare stocks that have rallied over the last week or so. So obviously we mentioned Saba this morning. Again, not in amazing bullish order flow, but the stock's in play right now. So we're looking to see if we get some follow through. Some of these stocks are just coming off the mat. You can see NVAX showing some pretty good bullish order flow and rallying up. XENE is right at a breakout level today. Moderna is right at a breakout level right now. So again, you need to know your price levels. Lilly, we actually mentioned before. Okay, obviously we keeping an eye on that one since yesterday as well. Amgen showing signs of a potential bottom. You can see how we'll work the chart. So again, this was the last box that we drew. And now here in Amgen, because if we zoom out this downtrend, that's where it broke the downtrend. Let me get the volume off the screen so that you have a really clear picture of that. That's where it broke the downtrend. You'd need to put another one over here. That's the previous low. And yesterday, Amgen now broke and we're starting to look to build a position, small position. Now, this is a big thing I want to get across here. Remember what we keep talking about with situational analysis. The stock has had clearly bearish order flow for a while. It's a little different from some of the other stocks that are like Lilly, which I think we talked about. We'll look at in a second, that have already broken out and are in bullish order flow. Think about like we talked about yesterday, where John was a hedge fund manager and Lewis was the guy he was calling. If this is the first time John's picking up that phone and saying, let's start building a position, you need to spot that that's the first time that they're building a position in this stock, which means that it should be your first piece of the position because it's their first piece of the position. If our job is to piggyback the order flow of deep pockets, we have to pay attention to how long they've been buying, and that's going to reflect in our position size. Just kind of makes sense, doesn't it? So that's a good example right there. All right, so sticking with the healthcare, Amgen reversing a little bit. Johnson & Johnson broke out or breaking out. Again, you can see very similar to what we just looked at. Lilly is one that we were just taking a look at, and that's been in some pretty solid bullish order flow for roughly about a week or so. Two other ones that are close to breaking out right now, DHR, as well as Edwards Life Sciences. This one's got to get a little bit higher above 120, but I wanted to give you a decent list. So what we're going to do now is we're going to work our way over into some tech stocks. You can see they're performing well for the week and the month. And we'll jump over into some of those ideas, looking for new ideas to start to buy. Now, again, obviously, we need to talk about Bitcoin and the rally that Bitcoin is going through right now. Pausing a little bit today, but if you remember yesterday, we actually mentioned Mara was actually our stock of the day yesterday. If you go back to the yesterday's live stream, and Mara not only gapped yesterday, made us wait a little bit, paused a little bit in the morning, but gave nice trade here and then an especially nice trade in the afternoon. So Mara was at the top of our list. It's a Bitcoin mining stock, but also obviously considered a tech stock. Now working our way over into some other ideas that we have been mentioning for a while. NVIDIA, which is also up another $3 right now. AMD, which is hovering right near all-time highs. MRVL, also resting right at new highs. What else? So there's a couple more that I wanted to make sure that we talked about. AFRM, which has cooled off a little bit after ripping here and here. So we have an alert set for AFRM at 160, and Xilinx is going to round out that crowd right now. So I want to just talk about something that I just mentioned. You remember how I just mentioned where I just said AFRM set an alert? That's a huge part of trading. Remember, we talk every day. There's you have your edge, then you find stocks that match your edge when you do your scans. Then you decide which stocks become trades that go into your trading game plan. But some of those stocks like AFRM in the right area, but need to hit a different level before we get involved. That goes into your tracking journal, which becomes an alert where then you decide if it gets above that level. Very similar to what we've been talking about in BBBY. So we'll take a look at that. We'll kind of actually finish up on this right now. 124 has been an alert for us for a while. So that went from tracking journal to trading game plan. So you start to see how being organized is kind of 90% of the battle of trading. I'm going to say this again. The trading part is not hard once you have structure. It's understanding how to find your edge, which again, our edge is order flow and tape reading. Have the edge, develop the edge, scan for the edge, and then decide which stocks are trades. Then after the market opens, once your software is set up properly, it's kind of just giving you ideas. And obviously, if you're in a community like ours, we're going back and forth with ideas all day long. So I want to end today's call with something really important. Actually, I want to. Somebody's asking about Tilray again. No, absolutely not. Look, you know me now. No, absolutely not. The stock is where is the edge? Where is the edge to being a buyer of this stock right now? And I'm saying this in a hard way. I'm saying this in a loving way. I'm saying this as your as your friend, as your buddy. There's no edge here. You are guessing. This is a part of the list. And Andre, I hope you can take it. And I'm assuming you can. This is why we're on this call. Okay. This is exactly why we're on this call. I get it. It's a cheap stock. It's a popular cannabis is a popular idea. Cannabis stocks, everybody would love for them to rally. Our job is to piggyback when the smart money's doing something obvious. You can't look at this stock right now and say, my gosh, somebody's building a position in this stock. I want to join them. I don't see that. Maybe it goes up today. I don't know. But there's so many other ideas that already have easy order flow to spot, have obvious spots to get involved with them, have spots where there's push and a pause for multiple weeks. Volume looks great. Push up on heavy volume, pause on light volume, which LJ mentioned yesterday in the Facebook group. This does not meet that criteria. And I know I'm using this as an example. And Andre, I can't say this enough. I'm saying this as somebody who truly wants to help you. I understand why we as traders sometimes look at these ideas. And maybe you want to nibble a little bit. But there's so many other ideas that have obvious order flow, easy tape to read, that are already moving in the direction, clearly have institutional smart money support, and we just have to piggyback that for the ride. This is a trade where you're hoping it starts to move, and we all know if you don't have that control, if you don't have an edge in the position, hoping is not really a longer term play. It's not. And once in a while you get lucky, but who wants to be lucky? You're on this call at 7:30 in the morning because you want to be good. That's why we're on this call. All right. So that's a great way, I think, to finish it up. I have to head over into the other call right now. We got to get ready for our game plan meeting. If you want to learn more about the boot camp, click the link below the video. If you have any questions, our support emails in there. I'd love to see you in the boot camp. We just have the most amazing, amazing people in our boot camp. And I think it's an amazing experience as well. We have a lot of people starting their second year with us this month, actually. It's super exciting, and I'm eternally grateful. So anyway, have an awesome day, everybody. Thank you so much for joining me. Do me a favor, subscribe, hit that like button. And if you want to learn more about the bootcamp, click that link below. Remember, FOMC day today, so you got to be aware if you're day trading in the afternoon. Take care, everybody. Have an awesome day.